What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a Thursday night CRTD technicals and statistical thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. You guys, just a quick note, I am still not feeling all the way good. I still am under this cold, so if my voice goes away, please bear with me. I'll go ahead and try to adjust as we try to finish our analysis here. But yes, let's go ahead and take a look at CRTD on the 4-hour chart, and I am going to show you a couple areas for us to look out for. We are looking at supply and demand zones right over here, so these are very important for us to look at. So the supplies would usually be in the red and the demand zones would usually be in the green. So we can see that we are approaching a this is very close to a supply zone right over here. So the price action may very well make a continuation up to the upside before facing a larger capitulation event, and this can likely present some targets down to this first or the second actually demand zone. So what I'm looking at is a potential upside move based on raw price action here. If you can see this actually has the form of a bull flag. I usually don't follow bull flags or formations like that. It's just those have a lesser hit rate in comparison to like triangles and stuff, or the occasional head and shoulders here and there. But also descending channels. But with that said, yeah, so we're looking at some bullish price action right here. So this can actually present a top target of, at best case scenario, we can look at the test of this this supply zone at about $2.12. Now, if we take a fib retracement from our current range in a short term, you can actually see that supply zone top is very much in confluence with our 1.618 golden mean, or the golden ratio, which is at $2.19. So we can see a potential resistance range starting from, first of all, yes, of course, we have the top here tested with this candle, which was at about $1.70. So in all technicality, we do have a range of resistance between 170 and $2.19. But my actual discretionary self made a supply zone of between $1.89 to $2.12, but the overall range is 170 to 219. So definitely keep that in mind. We could face a pullback based on this raw price action and technicals setup that we're looking at right over here. Okay, so now another good thing is that we do have some supports from, this is actually the 50-day simple moving average. This is the 200-day simple moving average, and this is the 100-day. Now, the 50 and the 200 do have some shared confluence within this demand zone right over here. The demand zone down here is between 61 cents and 68 cents. And this is likely to be an area where we can actually face a downside move too. A good thing is that if we're looking at a closer perspective, we can see that the SMA 10 is acting as support for us to use for a continuation onto the upside, followed by a smaller type of bull flag formation right over here. Okay, and I know for other viewers, you would possibly also see the let me just get a drawing tool right over here. This is it here. Okay, so we can actually see a potential shoulder, head, and this is shoulders. So you can actually see a potential inverse head and shoulders as well. And if you do want to get that technical with it, we can actually take a formation, the formation's price objective from the neckline to the lowest point of the head. We can actually take this and apply it to this to the bottom of the head and shoulders shoulder. So we can see that we're actually right within the price objective is suggesting $1.96, which is right in our supply zone. So this is the price objective is also giving us a hint, you guys, okay? So now let's go ahead and move on to the next chart to see what we have. This is going to be the statistical side of the analysis, and statistical, why? Because I've actually made a back test by hand throughout the entire trading history of CRTD. The criteria for this backtest is using volatility versus momentum profile, and it's based on every single time that we have started a contraction phase from what I consider to be critical expansion or critical volatility anywhere upside the 90 percentile, which is where my indicator is. When we've started a contraction phase towards the downside based on these critical reads, I have taken the downside thrust in this particular situation, the downside thrust versus the duration of the iteration, and also the iterations that have been guessed correctly to the downside versus the ones that were guessed to the upside. So that gave us an averaged mean. And these are the statistics that have come back from that backtest. And we are looking at a total of 15 iterations in which 13 were guessed correctly to the downside. We have an average downside accuracy of 86.66% with an average downside thrust of minus 48.36% over the span of just over 77 days. Which is just over about 2 months, or just about 2 months there. This is proof of work. So now if we can apply these metrics, the minus 48.36% statistical mean, and I do mean that without any pun intended, I do mean that that this average or this mean is actually a statistical metric. It's not a certainty. Please know the difference. Okay, so now let's apply that decline. Excuse me, you guys. I'm not feeling too good. Okay. So let's apply that 48% decline from the firing of the signal, which could potentially be right over here, since we are now in order to apply that statistical mean, we do need both of the volatility component of the BBWP and the moving average both pivoted to the downside and below the critical volatility percentile, which is anything above 90. And as you can see, we have both pivoted towards the downside, and that is where we can start applying that metric. Now, that metric actually lands us right in confluence to the 2.618 golden mean at 70 cents. As you can see here, our stochastic momentum isn't pivoted all the way down to the downside. It is still suggesting a little bit of sideways, maybe a little upside before a continuation onto the downside. This is likely a corrective move before facing further downside. Okay, so this is presenting 70 cents, 2.618, and we're looking at 70 cents also right over here. If you can take a look at now our demand zone, you can see that the top area is 67 cents that we were looking at, or 68. So it's very much in confluence with our supply zone. And I actually made the notes right over here that the statistical target, the 3.618 fib, which is another golden mean, and our second demand zone, which is this right over here, all share confluence within a downside move. So I can likely see a potential push to the upside. It may not actually reach all the way up here, but this is essentially the supply zone for short positions to open or long puts before a continuation onto the downside. Now, do remember that I am talking about an averaged mean, and this is the average duration of time is what we have to pay attention to. We're looking at an average 2 months for this move to play out, since we are on the daily chart and we're looking at it in a higher term time frame. And if we do fail the 70 cent level, it is very much a possibility for us to actually come back down and test our descending broadening wedge, since we do have 1, 2, 3 tests based on the golden rule of 3 that I often speak about within our channel. We're looking at 3 tests of the resistance before a large capitulation event, followed by an actual true breakout test on number 4. Number 4 still has not retraced to test our newly converted resistance into now support. So there is the possibility to where if we can reach the 2.618 at 70 cents, we might as well touch that support, confirm it before us continuing to the upside. The thing is here is that we may have already made the price objective for this formation. Usually the price objective is located at the genesis of the formation. So if we were to put a trend line right over here, you can see that our target is essentially $1.83. We have reached a high of $1.70. Not quite it, but that could have been the price objective met on test number 3 incorrectly. But, you know, variances happen within the markets and nothing is guaranteed. So it could very well be that. Okay, so let's go ahead and move on to the last chart for CRTD before my voice just entirely goes away. My apologies, by the way. So this is the RSI analysis. We're going to be looking at the 12-hour right now. So you can see that we actually have two primary drives of hidden bearish divergence that are not playing out, or that have not played out just yet. However, I did catch 1, 2, 3, and 4 drives of bullish divergence, regular bullish divergence, and in which this one started to play out, and these have already started to play out as well. Now, please do mind that in the 12-hour RSI, we are overbought. We're at the 74% level, so there is a potential that we can continue up a little bit to the upside before facing some downside. And now let's open up a multi-pane of the RSI for us to look at several time frames at once. I have made a drawing of my RSI properties for you guys to consider looking at as I talk so that I don't have to explain it throughout every single video. Let's go ahead and pull that picture up. This is actually it right here. And now let's do this. Okay, so these are the RSI properties for you to look at, okay, while I talk. So let me just push this back right over here, and we're going to start with the immediate short-term time frame, which is 30 minutes. 30-minute is absolutely in bull strength percentile. It does have a slight pivot to the right. However, the moving average is still giving us a hint that there may still be some upside to go. Let's look at the micro time frame. Let's go to the 15-minute. 15-minute is also approaching overbought. It is well within the grips of the bull strength percentile moving average, suggesting a continuation to the upside. Bi-hourly RSI is within the bull strength percentile as well. However, it is in the shallow areas of the bull strength percentile, which means that we are likely to be gravitated towards the downside if it doesn't continue on just a little past this shallow area here. When we're in these shallow areas, we can't give too much credit. We need to make sure that we're well within the grips of whatever percentile we are in order for us to gain that better bias and direction. Now, the 6-hour RSI is also well within the grips of the bull strength. It is now starting to pivot. There may be some loss of strength right over here as we see the larger time frames unfold. Okay, so now let's look at the daily since we already saw the 12-hour. The daily is suggesting and also weakening its pivot towards the upside, and now it has made a bearish cross, and the moving average, which is this pink line, is above the RSI signal. So we're trading below this moving average, which we can possibly use with a little bit of a further upside thrust. We can actually use the moving average as a form of resistance before us continuing onto the way down, which is very much in accordance to what we're talking about right over here. Potential test to the top of the range using potentially the price objective of the formation itself or the supply zone before us facing a capitulation event to the downside. So all of the signals, all of the indicators, and the statistical metrics are in accordance with each other. So there is the potential to where we can actually see some downside coming in soonish. We are cooking within the RSI overbought level, so we do have to keep that in mind. Okay, you guys, so I'm going to think about putting up a potential play for this, and this could be a long put play, similarly to the GME one that we did just a few weeks ago. That was a large play. Very good if you guys got in. Please know that I'm not a financial advisor. I can't actually suggest for you to buy or sell any assets, okay? Do your own DD and we'll be okay. But with that said, I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, please don't hesitate to reach out to me on Discord or Twitter. I'll make sure to leave the links in the description below for you to consider joining the trading community in Discord called ARCa. But yeah, this is good night, and I will catch you at the bell mañana. Adios.